Hello friends, welcome to our channel JipiGo. Today we are going to discuss briefly about GST. GST means goods and service tax. It is an indirect tax which is levied by many countries across the world. France in 1954 was the first country to levy GST. Taxes are of two types, direct tax and indirect tax. Tax which is directly levied on individuals and business is direct tax such as income tax. Tax which is not levied directly on individuals is indirect tax such as GST, VAT, etc. The indirect taxes which were levied before GST had a lot of cascading effect. Cascading effect is the increase in the value of an item due to the taxes paid on taxes levied. The cascading effect increased the value of the item considerably. In order to remove the cascading effect, the need for GST was felt. GST was levied in India on 1st July 2017, except Jammu and Kashmir, in which GST came into effect on 8th July 2017. In India, any tax can be levied only by passing a law. This means that any tax can be levied only by the Parliament and the state legislatures. Therefore, the Parliament passed 4 acts by the 101st Constitutional Amendment of September 2016, the CGST Act, UTGST Act, IGST Act and the Compensation Act. The UTGST Act or the Union Territory GST Act is for the Union Territories which don't have any legislation. Then the Government of India on September 16, 2016 issued a notification to the states and the Union Territories to pass a state GST law within 1 year from the date of issue of notification. Assam was the first state to pass the state GST, followed by Bihar. Finally, the GST law was enforced on 1st July 2017. The GST replaced several taxes which were levied by the central and the state governments. In Jammu and Kashmir, this law came into effect from 8 July 2017. Under Article 279A of the Indian Constitution, a GST Council was formed to make recommendations to the Union and the state governments on the issues related to GST. The GST Council has 33 members, 2 from the center and 31 from the state and the Union territories. The Union Finance Minister is the chairman of the GST Council. The Finance Minister of the State in Finance Ministry and State Finance Ministers and Union Territory Finance Ministers are members of this council. 50% of the members of GST Council are required to be present for the proceedings to begin. Decision making requires 75% weighted majority of votes. The vote of the central government shall have the weight of 1/3 of the total votes, whereas the votes of the state government shall have the weight of 2/3 of the total seats. So it is not a very easy process. GST is a consolidated tax in the sense that many taxes were subsumed in GST, such as the central VAT, central excise duty, services tax, additional customs duty, etc. GST is levied on all transactions such as sale, transfer, purchase, barter, lease or import of goods and services. GST is not levied on alcohol for human consumption, electricity and petroleum products such as crude oil, high-speed diesel, motor spirit, natural gas, aviation turbine fuel, etc. This is because of the high revenue it generates for the states and the union. GST is a destination-based tax. That is, the goods and services will be taxed at the state where they are consumed and not at the state of the origin. The state where any good and service is finally consumed will have the right to collect GST. There are 4 types of GST: the central GST, state GST, union territory GST, and integrated GST. CGST and SGST are used for transaction inside the state. If an item is sold in any state, then both CGST and SGST will be applicable there. Both are to be paid at equal rate by the customer. IGST is levied on intrastate transactions. UTGST is levied on union territories which do not have legislative assemblies. Transactions within such UTs will have CGST and UTGST. GST is pegged at 5%, 12%, 18% and 28%. Some items which are the basic needs of people like milk, egg, curd, lassi, unpacked food grains, unpacked paneer, etc. have 0% GST. Returns are to be filed by GST registered suppliers. On the 10th day of every month, GSTR 1 is to be filed. On the 15th day, GSTR 2 and on the 28th day, GSTR 3 should be filed. Any taxpayer can opt for the composition scheme whose annual turnover is 1.5 crore or less. This ceiling is 75 lakh for Himachal Pradesh and northeastern states. The taxpayer has to file one return every 3 months. Under the composition scheme, input tax cannot be claimed. Tax is to be paid at normal rates under reverse charge mechanism. Therefore, it discourages trade between sellers which are registered under composition scheme and sellers which are registered under the normal scheme. These sellers cannot supply goods which are not taxable under GST. The sellers under composition scheme cannot make interstate supplies. They should not be a manufacturer of ice cream, pan masala or tobacco, or casual taxpayers or seller on e-commerce or non-resident taxable person. GST uses a code called HSN. HSN stands for Harmonized System of Nomenclature. It is used for identification of goods. This code is originally used worldwide by the custom departments to identify goods. GST also uses Servicing Accounting Code for identification of services. GST provides for e-way bill. Whenever any item worth more than 50,000 is loaded on any truck, electronic information has to be uploaded in the GST network. This information is then shared with supplier, recipient, and transporter. The time period for delivery is fixed in e-way bill. If any reason the truck is changed, then the information is to be uploaded in the GST network. Thus, real-time information is available on GST. Revenue officials are to check 5% of the complaints they receive which have proof of deviations of GST. They are required to submit summary report of tax evasion within 24 hours and final report within 3 days. Thank you.